Good morning, everyone. I'm Ted Daniels, the founder and president of the Society for Financial Education and Professional Development, or SFEPD. We teach financial education and promote professional development in communities nationwide, with a focus on helping those who often lack access to the knowledge needed to be financially successful. On behalf of the SFPD team, we welcome you to our second 2024 Quarterly Talk with Ted. We're delighted to host quarterly financial discussions with top experts and thought leaders in the education, finance, government, and nonprofit sectors, and share best practices and useful information with policymakers, researchers, financial educators, and consumers. Today, we will take a deep dive into and look at homeownership and the wealth gap. With that in mind, we are fortunate to have as our special guest the Honorable Sandra Thompson, who is the director of the Federal Housing Finance Agency, commonly called FHFA. She was nominated by President Joseph R. Biden to serve as the director of the Federal Housing Agency and sworn in on June 22nd, 2022. Ms. Thompson has over 40 years of experience in the public and private sectors with expertise in supervision, consumer protection, risk management, and consumer outreach. After leaving the agency, Ms. Thompson served as the Deputy Director of the Division of Housing Mission and Goals, overseeing federal housing finance agencies, housing and regulatory policy, capital policy, fair lending, and mission-critical activities for regulated government-sponsored entities such as Fannie Mae, Freddie Mac, and the Federal Home Loan Banks. Before joining the Federal Housing Finance Agency, Ms. Thompson worked at the Federal Deposit Insurance Corporation, commonly called FDIC, for more than 23 years in a variety of leadership positions, including as the director of the Division of Risk Management Supervision. Ms. Thompson is an outstanding graduate of Howard University in Washington, D.C. We are fortunate to have the Honorable Sandra Thompson here today to share her expertise with us and to bring us up to date on current housing industry initiatives to increase home ownership. Following our talk, we will take questions from you. And feel free to ask questions using either the Q&A feature or the chat feature. We hope to answer as many questions as possible. Without further ado, I would like to bring to you, and you help me bring a warm welcome to our speaker today, Ms. Sandra Thompson. And thank you for joining us, Sandra.
Good morning, everyone. And thank you, Ted, for having me here today. I do want to thank you for that introduction, even though that 40 years of experience dates me just a little bit. Just by way of background, this is a topic that's really important to me. And I just want to make sure that people understand what we do and how we do it. As Ted mentioned, I currently serve as the director of the Federal Housing Finance Agency. I knew from a very young age, and now that I'm a little older, I look back and I really understand how important homeownership is to families. I was born and raised on the south side of Chicago, and my mom still lives in that house today.
Oh, yeah? Oh, that's great.
Yeah. And it's been a minute. In fact, I do remember when we moved, we lived in an apartment on the south side, and we moved. We were having the house built, and it was a neighborhood, and there were lots of kids on the block, and it was just important. Our community was very involved and engaged, and it was just a great experience, and just so happy to have the opportunity to really understand and tie what growing up in that community on the south side meant to my life, how it poured into me and how the people poured into me, but just how important home ownership is. I do remember, my entire family came from Mississippi. We were part of the Great Migration. My parents were.
Yeah.
And so many of their brothers and sisters came and they stayed with us for a year or two as they migrated from, Mississippi to the Chicago area. And so we just really value homeownership and think that it is just so critical today. I do think that, homeownership is something that all American families deserve the opportunity to experience, if this is what they choose, because everybody doesn't want a home. But if you choose one, you ought to have the opportunity to have that experience, no matter what your background is, no matter what color you are,
Yes.
or other preferences. And this is really something that grounds and guides everything that we do, especially me today. And I just really have a privilege to have responsibility for some housing policies that hopefully can be beneficial to communities across the country. And so I just really appreciate it. If you would put this, I think we have a slide deck if we could start, and I'd like to tell you a little bit about what we do at
Yes, please do.
FHFA. Oh, that's not, there we go. Is that mine?
Yes, I believe it is. Okay.
All righty. So FHFA is an independent regulatory agency. We're the regulator and we're the conservator of Fannie Mae, Freddie Mac, and we're the regulator of the federal home loan banks. Congress established the FHFA, our agency, in 2008, and the purpose was really to protect the safety and soundness of the housing finance system and also to promote affordable and sustainable access to mortgage credit nationwide. And we do this by supervising and regulating these entities. And this is a huge part of the housing economy. Together, the enterprises, Fannie Mae and Freddie Mac, and the federal home loan bank system provide about $8.4 trillion in funding for the United States mortgage markets. And these institutions really perform a vital function to the American economy by providing liquidity and stability to the secondary mortgage market. And what this means is that banks and credit unions and other lenders can make loans, and as long as they meet the criteria that's been established by Fannie Mae and Freddie Mac, Fannie and Freddie will buy those loans from the banks and from the insurance companies. And then the banks and insurance companies and other companies can use those funds to make more loans. So they really provide a lot of liquidity. And so the banks don't, and credit unions don't have to use their balance sheets to provide liquidity for housing. One of the things that's important to us is really housing affordability. And we've seen that these housing affordability challenges present significant barriers throughout the country, not just for homeowners, but for renters who are also looking to seek to buy a home. We've heard that rent is too high, home prices are too high. A lot of first-time home buyers with the interest rate environment that we have today is making things challenging for people to even enter into the homeownership market. And so we are just very focused on affordability, and we're also focused on sustainability. And so a critical part of our mission, which we're going to focus on here today, is how we advance homeownership in historically underserved communities. Okay, this is an interesting chart. And if you can look at it, when you look at the homeownership gaps between white families, which is at the top of the chart with the gray line, and then communities of color, and we've got represented on this chart, and it's Asian, Latino, and Black. When you see the numbers, it is really incredible that there is such a gap that, and I'll use the highest and the lowest. So there's a homeownership rate of 74% of white individuals have homes, and then the Black is 45.7. So that's a huge gap. But what's really more alarming is the fact that the racial homeownership gap is as wide now today as it was in the 1960s when lending discrimination based on race was still legal. This is just unacceptable. If you can move to the next slide, please. Closing the homeownership gap really helps us move closer to eliminating, which is an equally persistent wealth gap, which is another important reason that homeownership is so important. I mean, you all know that sustainable homeownership is the greatest builder of wealth, and especially generational wealth. And it's been that way for a very long time. For most families, their home is the largest asset that they own, and homeownership is really the primary way in which families build wealth, and they can then pass that wealth on to their children and grandchildren. And during my time leading the FHFA, I've made it a priority to advance both sustainable and equitable homeownership throughout the country, and especially in historically underserved communities. And I just want to pause for 1 second and talk about the sustainability part, because we experienced in 2008, 2009, a huge issue with regard to people losing their homes. Borrowers had mortgages they didn't understand, and they had loans they couldn't afford. And there was a huge foreclosure crisis throughout this country where lots of people across the nation lost their home. And for many people, and most people, if not all, losing your home can be a traumatic experience. And so it is important to advance sustainability. It's not just important to get a home, but it is as important to keep the home, because it's very disruptive to families. You have to change your schools if you have kids, or just the whole process of moving, and the stress that going through a foreclosure process can place upon a household can be very disruptive. So at FHFA, we do focus on not just helping underserved communities that have been historically not participated in homeownership, but we also want to make sure that this homeownership that we have for everybody is sustainable. And that needs to be that premise needs to exist no matter what. One of the things that's contributed to the homeownership and wealth gap is appraisal bias. And if we go to the next slide, we all want it is so important. And I want to make sure I take my time and explain this accurately, because we want people in all neighborhoods to have the confidence that they can rely on accurate and fair and data-driven appraisals, and not have their appraisal for their home or the value of their home being determined or rooted in bias. And we know that that's not always the case. At FHFA, we've been working on appraisal issues very intentionally in recent years. For example, last year, we released loan level appraisal data to really shine a light on the issue of appraisal bias. And this was in addition to some of the aggregate data that we had previously released. And it's interesting because what we had heard was families of color were experiencing lower valuations when they purchased a home, or when they sold a home, or when they refinanced a home, than persons that were in majority areas. So if you have a white community, then what we have found is that the home values and home prices, like they were being appraised higher in non-minority communities than they were in minority communities. And we've even had people talk to us and come to testified before our agency and some of the other regulatory agencies about how they had to kind of whitewash their homes. What they would do is take all of their, their family pictures down, and they put generic pictures up. And so the reason I'm mentioning that is because we would hear about these things, through, media, and different people would recant their experiences with appraisals when they were trying to buy a home or refinance a home. But the data, when we publish the data and when we look at the data, it does show that there was consistent undervaluation of homes in minority areas as compared to non-minority areas. So the data that we have provided and is publicly available, it's from a representative sample across the country of appraisals that were conducted. I think we started in 2013 through 2021, and we are just focused on those appraisals that have been done or purchased by the enterprises, Fannie Mae and Freddie Mac. And again, the data set, and many researchers are using this, it's really been used to study housing valuation, housing market disparities, some inequities, and also consumer preferences. And additionally, to address some of kind of what we've seen in the appraisal industry, there's been a lack of diversity. And so there's a new generation of very diverse appraisers now entering the profession of appraisals. Now, we've had Fannie Mae and Freddie Mac partner with companies like the Urban League, and there's just a number of companies that they're partnering with, and they've awarded over 700 scholarships to emerging appraisers. And so with that outreach, again, there's a host of new appraisers that are coming into that profession. We also work collaboratively with the other federal agencies through what we call the appraisal subcommittee, and we work together so that we can highlight just challenges within the appraisal industry, and we work together with the industry to try to come up with some solutions. We have a committee, and I mentioned the appraisal subcommittee. We've had 4 public hearings on appraisal bias all last year, and I think we had one hearing this year. We heard witnesses' testimony from consumers with bias-related court cases. We heard from state regulators. We heard from appraisers, and we heard from lots of different people who have an interest in this issue. And so we're now looking at kind of lessons learned. What did we learn from the hearing, and how are we going to prioritize our policy decisions going forward? And the last thing I'll mention with regard to appraisals is this. In May, FHFA, our agency, and the Department of HUD, the Housing and Urban Development, which is right across the street from us, and the enterprises, we announced what we call a reconsideration of value policy, where it allows borrowers to know or be aware that they have a right to appeal the appraisal value and provide a lender and an appraiser with the necessary framework to review and respond to consumers' requests. So if you're a borrower and you're buying a house, if you don't agree with the appraisal as a borrower or consumer, you've got a right to appeal that value. And then lenders and appraisers are operating within the framework to really review and take a look at the issue that was raised. And we're just hopeful that some of these steps are going to help hold the enterprises, Fannie and Freddie, accountable for reducing and eliminating bias in the home appraisal process. It's just one thing we can do. It's one additional measure that we can take to help close the racial homeownership gap and to make sure that it stays closed. And along with safety and soundness, this informs almost every decision that we make. While there's no single policy or set of plans that will fully close the gaps and eliminate the barriers that stand between us and equity in the housing market. You know, a lot of the actions that we've taken at FHFA, we believe that they've meaningfully addressed some of the racial and ethnic disparities in both home ownership and wealth. And one of these examples is through what we call the Enterprise's Equitable Housing Finance Plans. Now, one of my first actions after taking over as the head of the agency was to direct Fannie and Freddie to implement these equitable housing finance plans. And the purpose really is to really understand the barriers that historically underserved populations face in home ownership across the country. And they took a look at the Black homeownership journey, the Latino homeownership journey. They're looking at, Native American, they're looking at Asian American, and they're looking at Pacific American journeys, because each community is different. But the plans are really designed to, again, promote the safety and soundness of Fannie and Freddie while making sure that the housing finance markets are offering equitable access to affordable and sustainable houses. Everybody, it's not a one size fits all. Our credit standards are the same, but how do we view different communities? Are we making sure that the mortgage documents are translatable? There are a lot of non-English speaking communities or communities where English is not the primary language. So we've asked Fannie and Freddie and others to translate some of the major mortgage documents so that persons who speak, Spanish or other languages, and I think we've got 5 that we've translated to date, are able to look at these documents so that they can understand what they're signing and what they're getting. And buying a mortgage is a document-laden process. And again, it's the largest asset that many people have. So understanding what you're signing, understanding what your rights are just so very important. And so these plans really identify barriers, but they also come up with solutions to address some of the barriers that have been identified. We know that even today, all communities don't have the same access to housing opportunities, but we do think that these equitable housing finance plans are helpful in having the enterprises come up with some targeted approaches to address some of the disparities. And in just the first few years that the plans have been in place, we're seeing some very significant positive impacts. Last year alone, the plan supported close to 2.6 million households, and they reached over 20 million households through kind of affirmative marketing efforts. For example, and this is something that I really think is important, and that's an initiative called Positive Rental Payment Reporting. This is important because most, before you buy a home, most people are renting. And so this program has really been able to help identify creditworthy borrowers who might not otherwise qualify for a mortgage. And what happens is the borrower gives consent to the property manager, landlord, and this is true for properties that Fannie Mae and Freddie Mac own, but the borrower gives permission to report to credit rating agencies the fact that they've paid their mortgage or they paid their rent every single month. And it's interesting because many people that are renting, and this isn't always true, but it's a big percentage, don't have a credit score or don't have a credit file, or they've got a very low credit score and what we call a thin credit file. And it's interesting because when you have a mortgage, your payment of your mortgage is counted towards your credit score because it's a debt. But when you have rent and you're paying every month, we believe that the rent should be, the positive payment of rental should be counted too. And we couldn't figure out why rent as an expense wasn't counted, but a mortgage as a debt was counted, and a mortgage debt is an expense. So we have encouraged this positive rental payment program for many of the properties that are owned by Fannie Mae and Freddie Mac. And the information is, again, only considered, the borrower has to agree to have their positive payments reported every month, but it will likely favorably impact an underwriting decision or credit decision if they ever go to purchase a home. And we've supported over 900,000 renter households. And a lot of people out of this 900,000 were able to establish credit scores for the very first time. And the other thing that we've done is what we call a cash flow assessment. You know, many people today are not working jobs where they, get paid every 2 weeks. You know, you've got influencers and TikTokers and all of this other stuff that I don't know what they do, but they get paid, based on, I don't know if it's a regular schedule or not, but we have a process in place at both Fannie Mae and Freddie Mac where they look at the cash flow. So they'll, again, with the borrower permission, they'll look at, the bank statements to see, well, you may not have, $1,000 coming in every week, but you've got, $1,000 coming in every month, but it's at different times. So just making changes for this generation with new professions that isn't traditional in the way that we think about it, and making sure that the mortgage process takes all these things into consideration. And so we just hope that, this cash flow underwriting and the positive rental payment history really allows the people that are making the decisions on the loans to approve the qualified borrowers faster, and hopefully making sure the borrowers can afford the loans that they get. We've also had these special credit purpose programs, and they've supported over 17,000 families. And again, those are targeted to borrowers in underserved communities. And while I do recognize that there's a lot more work that can be done, we're very encouraged by the progress that has been made through the implementation of these plans in the first few years. And we're continuously evolving the plans. And we are also making sure that we are committed to engaging with the public on an ongoing basis to make sure that what we have in our plans is still effective and it's still viable, it's still logical, it's still relevant. And we want to make sure, again, that everything we're doing advances, affordability, equity and sustainability. And these are some of the goals that we work into everything that we do here at FHFA. And, we all have to work together with all of the different sectors of housing finance to make sure that the racial homeownership gap is closed, because we need to provide housing security for all Americans, no matter what they look like, no matter where they live. And so we just want to make sure that we've incorporated these principles into our actions. And I will stop there and answer any questions that you might have, and I'll turn it back over to you, Ted.
All right. Well, thank you very much, Ms. Thompson. That was really great, very informative. That's what we're trying to do, get the information out there. And you brought out new information today that I didn't know about. And it's very exciting. I'm sure our audience appreciate what you've stated today. And I thought about my time, too, in terms of the importance of home ownership. You said your mother still lives in the house that you all grew up in. The house that I grew up in is still in my family. One of my nieces live in the house now. So let's go back to when my father built the house back in 1951, and it's still in the family, and it used to be the primary place we would have our 4th of July barbecues. So it means a lot, where you can have home ownership, you can enjoy the property, it can be passed on to the next generation. It's just really exciting to know that we had similar experiences there in terms of maintaining the wealth in the house and maintaining the wealth in the family. And having others to enjoy the property that has been acquired early in life.
Right.
And but then I was going to ask you a question, but you answered it. But that's regarding the appraisal, because the appraisal process and how it has impacted, the value of properties. And here again, I experienced the same thing. It was 47 years ago when I was in the process of selling a house in Atlanta to move back to DC. I had whitewash my house. I didn't call it whitewash. I just said I was going to take all the pictures down, all the, all the history down, and leave the house empty. And I lived between, at the time, I lived between both my neighbors were white, but I still had to remove all the furniture and all the pictures out to get a fair price for the property when I sold it. And so the issue still exists today, even though I experienced it back 47 years ago. But I'm delighted to know that the Federal Housing Agency, HUD, and others are working on this issue because it means a lot. It can make the difference between, it also keeps that gap wide, in terms of how much wealth exists in each race or ethnic group. So I'm really excited to know that you all are working on that.
Yeah, Ted, it's interesting. We had these hearings, and it was all of the members of the appraisal subcommittee. So that's like the Federal Reserve, the FDIC, the Office of the Comptroller. They're in charge of supervising the large banks like, JP Morgan Chase, the Bank of America, Wells Fargo, all the big national banks. And so we also had HUD and CFPB. So there's about 8 participants on this panel, and we hosted hearings last year and this year. And at our first hearing, we invited a couple that had experienced an undervaluation. They lived on the West Coast, and they were in, I don't know if it was San Francisco or Oakland, but they got an appraisal for, I think it was like $830,000. And the wife had been looking at like the home sales on their block and in their community, and it was over $1 million. She said, they took their pictures down, and they had a neighbor come in and sit when the realtor came. And that appraisal went from, the value went from like 800 some odd thousand to 1.5 or 1.3, but it was a substantial amount of money. And then people started coming forward and talking about their experiences. And it is helpful to hear about these things, but when you have data, you can have the discussion based on the information. And so it's all anecdotal, and it could be one-off, or that only happened to you, or you could say, oh, that was in California. But when you see the numbers, it's just really clear. And that was one of the things that we wanted to do by publishing data, is to bring some transparency to this issue. And so I'm sorry that this still exists today, but we're hopeful that, there's more awareness, there's more diversity coming into the profession, and just making sure that, there's a level playing field for homeownership across the country. So we're not trying to exclude anybody. We want to make sure that we're inclusive and that everybody has the same opportunities to experience homeownership at, a maximum value. That's
right. And that's what we need to do, because initially starting off, with the Federal Housing Administration, you had FHA were not providing the mortgage insurance to African Americans back in 1940. So it forced African Americans to move right into a rental situation, and sort of got stuck in that area because of that. So we just have to keep on pushing, because back in 1940, I was looking at the research on this too. Look at the numbers. Only 22.8% of African Americans own a home back during that time, and a lot of associated with the fact that you didn't have a place to, like FHA, to support you and as you seek homes. Now, we know over the years, and still, you got the Housing Act of 1968, but embedded in those numbers in terms of 44% now today on African Americans own a home versus 72% for whites. It's all embedded in structure and systemic discrimination that occurred. You had the Jim Crow laws in effect. You had all these things in effect that sort of slowed the financial and economic growth of the Black community. So the efforts that you're making now and other agencies to put programs in place to sort of move those numbers upward, I think it's just outstanding. I like the equity and housing finance plan that you have there, and the impact you've had. Over 2 million people have been impacted by that. I think that's great, and even with the idea of having credit reporting agencies to consider rent in terms of the ability of a person paying to pay his or her mortgage, I think is very important, because sometimes your rent nowadays can be higher than the mortgage payment you had when you bought the house. So if you've been able to sustain the rent payment, why shouldn't you be qualified to buy a house when the mortgage payment is only $1,800? I think that's going to be a big game changer for a lot of people, because some people have been in a rental environment for 15, 20, 30 years or more, and they have the income, but it just never was reported and on that credit report. Now, how many are all three major credit reporting agencies accepting rental payments from landlords?
Yeah, well, they're accepting rental payments from landlords on federally backed properties. And borrowers, if you have a loan and it's owned by Fannie Mae or Freddie Mac, in a rental property, because they do multifamily as well, and this is true at FHA too, the borrower has to say, yes, we would like you to report our payments, the positive payments, the payments that we make to the credit reporting agency. So yes, all three credit reporting agencies are involved, but also the new credit score models that are being used to conduct, underwriting on that decide whether, a borrower should get a loan or not. They're incorporating positive rental payments. They're also incorporating that cash flow underwriting. So when you go to a loan, you have to give everything, show them all kinds of documents, your W-2s, your, bank statements, your pay, last two. And again, for people who don't get that check every 2 weeks or every week or some regular routinized basis, having those bank statements and having someone analyze cash flow is also being incorporated into some of these underwriting decisions. The mortgage industry is probably taking its time updating some of the processes and programs that have been in existence forever. For example, many lenders are still using classic FICO, but we're in the process of updating the credit score model to the newer version of FICO and to another company called Vantage Score, where it was one company before, now it's going to be two, but they're taking into consideration utility payments, their positive rental payments, streaming and that sort of thing. And now this is how people live today. And so, many people don't have landlines, right, on their home phones. People use their mobile phones. And so when you think about, the things that people are paying every month, your phone bill, your utilities, taking all that into consideration to determine, does this person pay their bills every month? Yes. And when you're thinking about rental, like you said, in large cities and just across this country, people are making those payments, but it's not counting. And they still have thin credit files or credit files that only have, a credit card payment or repayment on there, or card payment or something like that. But we think that this is a game changer.
Yes.
And if anybody had to ask me, like, what was one of the most important policies that we've ever done, I think it was this one. And now because of, high interest rates, the mortgage rates, and the high home prices, people can't live where they work. You got to live, outside of the city if you work in the city. First responders, whether it's teachers, policemen, firemen, just people that need to be close to where they are, they can't afford it. And so we're really focused, they can make the monthly payment, but many times they don't have the down payment. And so there are programs available, but what we found is when Fannie Mae and Freddie Mac interviewed all these renters, they all thought they had to have 20% down. They didn't know, how to improve their credit in terms of having these payments count. And just talking to, credit reporting agencies, there were a lot of misunderstandings and misinformation that people just thought. And one of the companies that we used to do these surveys of renters, they said that many people thought they would never have a home, or there were people that experienced the loss of a home during the Great Recession. And so they didn't want to experience that. And it's a whole different market environment now. So we just really want to do everything we can, because we believe that it's unacceptable to have that housing gap be as wide as it is today, as it was, in 1968 when housing discrimination was legal. We just don't think that is appropriate.
Right. And you're right. A lot of people just don't know, but about the opportunity to buy a house. They get locked into being a renter, and they don't realize these programs out there that the payments they're making to the landlord can be used there. And this is really exciting. We're going to try to let as many people as possible, see this particular TED Talk to let them know, that it is available to you. They just don't know. We just got to get the word out there so people understand that what they're doing is a positive in terms of gaining wealth and home ownership, and that can really happen. Now, just want to make sure the audience understand in terms of using positive rent payments and reporting those positive rent payments. Is that only associated with houses where Fannie Mae or Freddie, not apartments rather, but apartments where Freddie Mae or Freddie Mac is insuring?
It's certain apartments. Certain multifamily properties that are owned by Fannie Mae, Freddie Mac, and FHA. So I want to make sure that that's in there as well. I did want to mention just really quickly one other thing that we're working on, and it is this heirs property, HEIRS, and the heirs property issue is really something that the home loan banks, which are our regulated entities on another side, they're the tangled titles. It's like if you have land, and this is very true in southern states and communities, you could have like a family owns land, and when the person passes away, it goes to, there's no estate, and it's called tangled titles, and they've been just really problematic because you've got your grandfather, great grandfather lived in these homes, and there's not a clear ownership. It could be Ted Daniels.
Yeah, the title is not clear. Yes.
And so those are the things that we've been also focusing on, because they've been very problematic across the country, not just in the southern states, but in urban areas like here in DC as well. And this has a huge impact on the ability of families to transfer generational wealth or their assets, because there's no clear title, and you've got to contact everybody that was associated with that person. And it's just very resource and research intensive. But I just wanted to share that with you, that's another example of one of the some of the work that we're doing to try to close this homeownership gap.
Right. I'm glad you mentioned that because we had at our annual Financial Literacy Leadership Conference, we had a workshop on this same subject about heir property. And as a professor out of Auburn University has done a lot of work in this space, and he discovered that was $46.1 billion tied up in heir property in Southwest Georgia and South Alabama alone. And he went on to talk about how Blacks used to own Hilton Head, Myrtle Beach, and it was all associated with the fact that it got transferred because there was no clear title, and it got it was sold out in pieces and pieces and pieces and pieces, and they eventually lost the wealth they had in their hands and didn't realize it. So any effort to address this is really, really important. I always tell individuals when we talk about estate planning, there are a lot of millionaires out here. They don't even realize they're millionaires, but because they don't realize that the property really, they really own the property, the heirs, their father, mother, grandfather do not have any legal documents in place like a will or a trust to transfer the property. So that's something that needs to be addressed. I'm glad you addressed on this level. Now, there are some local agencies working on this same issue. And it becomes a big issue too, even during a disaster like Katrina. I was talking to FEMA, and they have money to help people restore their homes, but the people could not demonstrate title to the property. You know, well, my mother lived here, my aunt lived here, and I'm living here now, but there's nothing on that. There aren't any documents in place to demonstrate that you're owner of that property. So it's important to address these issues early on in terms of who's going to own the property once you pass,
Right.
and how it should be used too. That can be considered as well. So I'm glad on the federal level something is being done in this area. Yes, that's good. Now let's see what we have. We have a few minutes here. I need actually one other question here, and that question is associated with state agencies in terms of enhancing home ownership. You'll get engaged at all with state agencies. I know the state of Maryland has a program, but I'm not sure about other states that would help individuals gain home ownership.
Yeah, absolutely. We work very closely with the housing finance agencies across the country. In fact, they have a trade association. I think it's the National Association for National Housing Finance Association. And they come together, and I meet with them once a year. And then they each have home ownership issues. And like you said, Maryland, they used to have a program where they combined home ownership and student debt. And they would pay up to, like, I think it was $35,000, and they would kind of reduce, like, by 1/5, like $7,000. They forgive it every year that you stayed in the house up to 5 years for the $35,000. But we work very closely with state housing finance agencies and also local agencies to try to be helpful in terms of home ownership, because the state agencies usually work with housing counselors, and they have some criteria that borrowers have to go through in order to benefit from their programs. And so we work very closely with lots of state and local agencies. In fact, for the past few weeks, I've been traveling across the country, and we've been hosting housing forums in small and large communities. We went to Columbus, Nebraska. We went to Franklin, Tennessee. We went to Las Vegas. I went to Kansas City with Congressman Cleaver about 3 weeks ago. We've been to Philadelphia. But what we do is we have these housing forum, and it's developers, it's realtors, anybody that touches housing, and even some of the people that work in local zoning and ordinance offices. And they come together and they talk about the housing issues that are specific to their area. And it's a good information exchange. And there's been a lot of follow-up, subsequent to those meetings, because at the end of the day, it is really important that there's an awareness, because federal needs to know what state needs to know what local is doing. This is an issue, this housing affordability issue, that everybody across our country is going to have to address. And it's going to take all of us, public-private partnerships and the like. So yes, we are definitely focused on state and local agencies and understanding what they're doing in housing as well.
Yes, it's really great. We have a student ambassadors program on HBCU campuses around the country, and one of the training sessions that they have is on home ownership. And what we're hearing today, we want to update our PowerPoint presentations that they use and speaker notes like this, in case these rental payments being used to help persons qualify for mortgages. It's really great. So, but they get excited too, because most of them come from a rental environment. So that's really why we present the home ownership seminars, but we also have them presented to their peers, so they can gain information for their own use as well as share it with their family members. And that's working out quite well. But this is really exciting to hear from you. Now, one other thing before we open up for questions, I would like to ask you. You mentioned the Urban League and some of the other entities involved in preparing individuals to become appraisers. And we may have some students online with us who may have an interest in becoming an appraiser. How would they go about reaching out to the Urban League or other entities, helping African Americans become appraisers?
Yeah, so there's about 34 sponsors, and I can send the
Oh,
specific information back to you. It's
that'd be great.
Urban League and 34 sponsors. And I think I mentioned that they've already awarded about 700 scholarships to people that are, looking at the appraisal industry. And I will definitely get that information back to you so you can disseminate it.
Oh, that'd be great. That'd really be great. This is really delightful. Now, what we'd like to do now, we have about 9 minutes to go. We want to ask some questions that are being presented by our audience. We have Melissa Sandra is going to read the questions off, and we'll respond to those questions. Melissa, would you like to start now?
Great. We do have a couple questions. What words violate fair housing? You've talked about fair housing violations. So are there certain trigger words that should be looked out for?
So when we looked at a number of appraisals, actually the appraisal report itself, and we saw language in there like, near the border or crime-infested neighborhood, things that are not necessarily, they just don't need to be in these reports. It's almost some sort of, coded language. And so what we've done is we've come up with some preferred language, like examples of what not to use and what to say, so that because appraiser goes out and they write the report on what they see and they describe, the neighborhood and other houses and comparables. And so you have to be really careful in describing the house and the neighborhood so that the lender who's looking at the assessment of value can get a good understanding of what it is and what it isn't, but with no bias and with, plain language that isn't insinuating something that may not need to be insinuated in terms of assessing the value of a house. And there's just a host of fair housing laws. And when we conduct evaluations on like our regulated entities, we look at all of these documents and we see, are you following the rules as it relates to, appraisals? Are you looking at, there's just a laundry list of things that need to take place. There's fair lending rules, fair lending laws, and we want to make sure that our regulated entities are in compliance with the laws. We want to make sure that our regulated entities, if they're using models, that they are fair and that there's no bias, because humans have inherent bias. And at the end of the day, we just want to make sure that, we take out the bias and we ensure that there's both fairness and compliance with all of the laws. Because everybody, again, if you can afford a house and afford to stay in there, then we want to make sure that the playing field is level and that you have as much an opportunity as anybody else, no matter what you look like or where you want to live.
Mm-hmm. That's great.
Great. We have one more question.
Sure.
Is there a website or agency clearinghouse where people can access a list of programs to help with home ownership? Probably specifically first-time home ownership.
Yeah, well, the HUD has a very robust housing counseling associations, and it's nationwide, and they help with first-time home buyers. They help with the process and understanding what goes into buying a home. And I think it's really important to understand the process before you even start looking at a home, because what will happen is if you say, okay, well, I think I'm ready to buy a house, let me go talk to a realtor. You talk to the realtor, you find a home, and you get emotionally attached to that home. And then sometimes you can get frustrated with the process because you got to fill out the application. You have to provide, all this information I mentioned, your W-2s from your employer, bank statements. It could be 2 months or it could be 12 months. And you have to do like employer verification, asset income verification, because the banks and the credit unions are loaning you a lot of money to buy this house. So they've got to do a lot of due diligence, but there's a lot of back and forth. Like you forgot this field or you forgot to fill in that, and you got to send this or you got to update that. And then the process itself, you start with the lender and somebody's underwriting, and that's a whole different person, and they've got more questions. So it could be a very arduous process, and it could take a very long time. And at the end of it, you go to the closing, and you're interested in the keys, but there's all these documents that need to be signed to make sure that you have legal ownership of the home. And so the housing counselor can help you get ready so that the process of purchasing a home isn't so frustrating, and that you make good decisions about your home based on, what the process is, as opposed to, emotional decisions where I'm just going to do whatever I need to do to get into that home, and then maybe stretch yourself financially in a way that may not be prudent. You can do it, but it might not be the best thing for your family at that time. And so just understanding the process, understanding what your finances look like, and these counselors can help you, through the process. And I think many of them are free to the borrower. They get paid through the lender or through HUD grants. But I just think that is so important. And again, they're located nationwide.
Mm-hmm. That's really great. Yes. Yes, it's not that it's not frightening, but it's just you just have to be intentional.
Yeah,
Work
but
with
it's for
somebody.
people that are buying a house and not my age. I mean, when you're talking about people, let's say coming out of college, or people that have been renting, understanding that when, the lights are not working on the refrigerator, you got to fix that. You can't call maintenance. You got to call the plumber, or you got to call this. It's just the unknowns for someone who has not had that experience before, and they've got a different experience with rental, and making sure that you have savings. It can be very, people need to have an awareness of, here's what we do as a renter, here's what we do as a homeowner, and understand those differences. And just want to make sure that, you know as much as you can before you enter the process, so that you can make some good, rational decisions on home ownership.
Right, and start building your wealth, And I always tell people too, you're going to pay a mortgage. You're going to pay a mortgage. Why not pay a mortgage on your house? When you pay rent, you're paying somebody's mortgage, the landlord's mortgage. So why not use that same money to pay a mortgage on your house, something that you will own and over time create wealth for yourself. So it's just as simple as that for me, that's where you should look at it in terms of, look, I got to pay, I have to have a place to live, I have to have shelter. Who do I pay? Do I pay this guy over here to rent this place? Do I pay this guy over here who has given me a loan to buy this house will someday be mine, and I have more control of my environment? Because there are non-financial issues here that you want to consider too in terms of home ownership. You can control your environment better versus being in the big, large apartment complex where you had the whims of your co-tenants in terms of what they do. So there's some non-financial matters that you should consider in home ownership. But above all, you want to have an environment where you're going to be a wealth for your family in the next generation. That's what it's all about, where you have some cushion that you can rely on as you grow your life. Well, I guess we're out of time now. And I just really appreciate you, Ms. Thompson, for taking the time. It was very informative. It really, as a matter of fact, as I said before, more than I expected, particularly when we talk about the new program, the impact program that's being put in place, rental payments being considered, and determine whether or not a person is credit worthy to purchase a house. All those things are new, and it's going to be shared with a lot of people and help them in their process of owning a home. I want to thank my attendees today for joining us. Just stay tuned for our September quarterly talk, and we'll continue discussion and provide information that'll be useful for you as you continue your growth and wealth over your lifetime. Thanks very much. Have a good afternoon.
Thank you.
Right. Okay.